It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast for our non-stop marathon all the way around 2025. Yes, it's real estate, and the Christmas run-up is feeling closer than ever because today, 1st of November, as we break down for you the Australian property market, things just got real today for a lot of you focusing on getting into that new property by Christmas morning. How many days until Christmas morning? 55 days. So it is achievable with a 4-week settlement, but it's going to be tight, right? This weekend, there'll be people attending auctions with all of what I've just mentioned weighing heavily on people's minds. Winning the auction, that is the first step if you're attending one of those this weekend. Then you've got your 4-week settlement. Then you've got to throw into the mix, unfortunately, at this time of the year, there are many vendors who just don't want to move out before Christmas. So that is a barrier. Bugger, you might say. Double bugger if that is what you have already had to deal with. You know, you've bought the property, but you just can't get in before Christmas. So let us know how all of that is playing out in your suburb of Australia. And thank you for the many emails that we get every week. The email address, as always, is myrealestatepodcast@gmail.com. And you can also leave that voice message. This is this new service that we now provide, which you will find the link in the show notes. So it is the weekend, Saturday, November the 1st. Let's go to the Blue Mountains and catch up with Paul O'Riordan from O'Riordan Real Estate. And good morning and welcome back to the Real Estate Breakfast, Paul. As we make this push towards Christmas and the mad scramble, as I mentioned, how tricky is that scenario I just laid out for people trying desperately to negotiate and be in before Christmas morning?
Good morning, Craig. Great to be with you again. Look, it's a real thing. It happens every year, so it's not unexpected. But with the conveyancers all taking those 3, sometimes 4 weeks off from kind of the 2nd to 3rd week of December till the mid-January, there's a real hole there. So yeah, the rush to get things done prior to is real. It's almost getting to the point, I think, in a couple of weeks where it's going to be too late completely.
You would have sort of encountered that where somebody has bought, they think that they've got time, right, between now and Christmas. Then the vendor just digs in their heels. You just can't really negotiate around that. If the vendor says, no, not going to do it until after Christmas, then you just got to sort of suck it up.
Quite often you'll have vendors who say, look, we just want to have one more Christmas in the property. If I'm talking with them early about that, I'll say, well, look, perhaps you really need to think of holding it back because with the way the market is at the moment, it may happen quickly and that may not be an option if you want to get it sold for a decent and reasonable price.
So our thoughts are with you if you are stuck in that vicious cycle. Now, coming up this morning, we're going to be unpacking some wisdom for buyers and sellers alike and tackling one of real estate's greatest riddles, and that is, what does real estate jargon actually mean? Because let's face it, property ads often sound like they've been written in a secret agent code. For example, the word cozy, that might mean that you can't fit a couch into that space. Or the words potential plus, that could translate into bring your own bulldozer. So what you see online isn't always what greets you at the open home. So if you've ever wondered, wait, what are they really saying? You're not alone. So, Paul, let's tackle the first question. As we know, it's an agent's job to present a property in its best light without being misleading. But as buyers scroll through listings, they often come across phrases that sound positive, yet might have these hidden meanings. What are some of those most common examples that you can give?
Okay, yeah, as we just touched on, full of potential, usually code for you'll spend most weekends at Bunnings, but can also mean the property has really great bones, except it's going to require some significant investment for that potential to be realised. Another one, quietly positioned. That one's classic. Buyers here peaceful and tranquil, but sometimes it can be agent speak for remote and isolated, and it's a long way away from everything and everyone, including services. My advice, check the area maps on the portals to get an idea of exactly how quietly positioned it is. Flexible floor plan. Another dose of agent speak here, Craig. Flexible floor plan can mean the floor plan is unconventional or confusing and will need some adjustment to appeal to most buyers. Always a very good idea to check the floor plan before visiting the property. And one that I use a fair bit, original condition. Buyers hear character and charm. Well, I hope they hear that, but it can mean that it needs quite a bit of work and significant updating to make it more habitable.
Yeah, that's a good one, that flexible floor plan. And the market has been incredibly active of late, as we know, but also quite unpredictable depending on where you are. Let's look at what's one piece of advice that you'd give any vendor preparing to go to market right now. Is there something that sellers should be doing or avoiding, just to make sure that they've got the best possible result in these conditions?
Absolutely. Look, my advice is always presentation is everything, and you've got to fix the little things as well. Buyers often walk through a home looking for reasons to say no, so my advice is, look, don't give them any. If a buyer feels there's a lot of work that needs doing, one of two things in my experience usually happens. Either they walk away, think it's all too hard, and they go and find something easier, or they make an offer filtered through their perception of what it'll cost to fix everything. And in my experience, a buyer will almost always overcompensate on that number. And a great example of this happened very recently, Craig. We had a property where the building report flagged a cracked bathroom tile and some broken tap fittings. The buyer came back asking for a $5,000 reduction, concerned that because it was in a bathroom, it may be an expensive fix. So I spoke to the vendor, and he had most of the materials lying around to fix it. He just hadn't got around to it yet. So he got it sorted the next day. We sent through some photos to show the issue was repaired, and the buyer was happy, and then they dropped the request for the price reduction. And when I asked the vendor what it ended up costing him, he said, look, a couple of dollars. So the little things can become very big things in a buyer's mind. So fix the little things before they end up costing you in a negotiation.
Yeah, good points. On our first day of November, it is a Saturday morning, and we'll come back with more looking at what the buyers should be doing and also what is one of the main drivers behind all of this activity. We'll talk about that after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
Well, right now, let's catch up with Margaret Lomas. Let's go all the way back to the 80s, because I thought it'd be interesting to look back maybe across 40 years at the real estate comparisons for real estate interest rates, also major cities and the bigger regional ones, etc. Look at deposits and wages. So let's start there. What have you dug up out of the 1980s?
During the 80s, the cash rate went from 10% at the beginning of the 80s to 17.5% by 1989. That was the cash rate. We understand that cash rates and mortgage rates are a little bit different, and there's a buffer built in for the bank to make a profit. But it's interesting to think that that's how high it got during that time. Now, if we go to the next decade, the 90s began at 17%. But at some point in time dropped as low as 5%. That was the cash rate. So it completely turned around during the 1990s. And there was definitely an equivalent period of time in the 90s where we didn't see a lot of property price growth at first because of that 17%. And then toward the end of the 90s, we started to go through a bit of a property boom. In the 2000s, we entered the 2000s at around about 4%, and we peaked as high as 9.5%. That was in 2008, but ended that particular decade at about 7.25%. The 2010s, we entered 2010s at 4.75 and ended that decade at 0.75. So very low, but the early 2010s, we did peak out at 7%.
You're listening to the Saturday Property Market Update.
And it is a Real Estate Saturday. Paul is with us from the Blue Mountains. Let's talk now about buyers, because we know that the competition is still very strong in many areas and stock levels remain tight. From your perspective, what advice would you be giving to anybody trying to buy in this marketplace right now? Should they, for example, be patient? Should they be flexible? Should they be acting quickly before prices rise further? What's your takeaway?
The Blue Mountains property market is moving very quickly at the moment, Craig, especially in the sub $1 million range. Everything we've sold since the start of September has gone in under 2 weeks. So if you're a buyer, timing is everything. It's absolutely crucial to have your finance and deposit ready and make sure you've lined up a conveyancer and building and pest inspector in advance so you can move quickly if you find the right property. But just as important, and something I think a lot of people overlook, it's being mentally ready. The market is moving very fast and you need to be in the right headspace to make a decision and act on it. Because in this market, it may get to the point where you've got to move very, very quickly and not a lot of time to think.
That mental agility in your mind, you've got to be there. You've got to have that in place. And there is no denying that the market has shown surprising resilience in 2025 and in some regions, real momentum, which we've talked about. From a real estate principal owner's perspective, what do you think has been the main driver behind all of this activity?
Look, I deal a lot up here with first home buyers. So obviously the stimulus that kicked in October has dominated the urgency that we're seeing. FOMO is creeping in, but look, with the Blue Mountains market, it's all facets. So you've got the entry level, which has grown by about 2.5%, actually, Craig, since June 30th, which is a bit astounding, only a couple of months. But even the top end of town, so the 2 million plus properties are moving as well. Whether it's sea change or lifestyle change that is driving that, I think it's mainly down to buyer confidence. And with the first home buyers, look, all that stimulus it's poured petrol on the fire of demand, and they are moving extremely quickly at that end of the market.
Yeah, we talk about that stimulus, especially from the 1st of October. Of course, now we're looking ahead towards Tuesday and the RBA getting together, having this last meeting for the year of 2025. Well, we were talking about it a couple of days ago with Nicola Powell from Domain saying that it's a 50-50, but then the RBA governor has sort of signalled that it might perhaps just stay in pause mode. I'm not sure if it's a 50-50 at the moment. What do you think?
The Reserve Bank has obviously shown that they're a little nervous, and it's got to be something very positive for them to drop it. I think it's going to stay exactly where it is. I don't think it's moving anywhere. I'd love it to move. I think the CPI has frightened them off, and they're not going to do anything.
Yeah, that's the way that it is looking. All right then, well, we'll wrap it up there and wish you all the best in the Blue Mountains for the weekend. And thanks again for coming back on to the Saturday Morning Property Show.
Thank you very much, Craig. It is always a pleasure to be with you. Have a great weekend.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
House prices in some areas surging by up to 141 grand in just 3 months.
Look, it's a significant amount of money to add to the median house price in quite a short period of time. But there's other areas. So Highland Park in regional Queensland. We've got Crow's Nest in Sydney, which has joined the $1 Million Club. And Crow's Nest in Sydney, that's for units. So units have edged over $1 million.
Yeah, interesting that we've got Queensland pretty much dominating with New South Wales. Yes, you've got the standout there in Western Australia. Brisbane, now the second most expensive city in Australia.
It's remarkable. It doesn't even feel that long ago where I was, witnessing an oversupply of units. I mean, you cannot say that for Brisbane now. It is a grossly undersupplied housing market, which is really coming out in price growth. I mean, we've got house prices and unit prices edging up another 4%.
We connect you to the best real estate information across Australia. The Real Estate Podcast.